Meta Platforms reported Q1 2025 earnings on April 30th, and it has made the stock soar very high in a short amount of time. In today's episode, I want to talk about some of the bullish numbers in the earnings release that has caused the stock to climb so quickly. I also want to highlight some of the not so bearish areas, if you will. I also want to go over some of CEO Mark Zuckerberg's key comments during the earnings conference call, especially around Meta's AI strategic plan and build out of its AI infrastructure. While I am not currently an investor in Meta, I have put Meta on my watch list after this earnings report. I am watching closely what Meta and Zuckerberg have to say about AI and its AI infrastructure build out. Okay, let's get to it. First, at the end of trading on May 2nd, a full 2 trading days after Meta released its earnings, Meta has increased over 8.7%. So congratulations to all those who are long-term investors. In a letter released by Meta along with its earnings, Zuckerberg stated that we've had a strong start to an important year. And he also stated that we're making good progress on AI glasses and Meta AI, which now has almost 1 billion monthly actives. So going over some of the bullish numbers. Right off the top, revenue was $42.31 billion versus Wall Street's estimate of $41.35 billion, which is a beat of 2.3% and a year-over-year growth of 16%. Earnings per share was $6.43 versus estimates of $5.28, a beat of over 21.78%, and a year-over-year growth of a whopping 37%. Also, operating margin increased from 38% to 41%. The daily active users increased 6% year over year. The ad impressions increased 5% year over year, and the average price per ad increased by 10% year over year. Meta also returned capital to shareholders with a repurchase in stock of $14.3 billion and also had cash equivalent of $70.23 billion. Meta also provided full-year guidance, stating that the 2025 total expenses to be in the range of $113 to $118 billion, which is lowered from its prior outlook of $114 to $119 billion. General and administrative costs declined sharply by 34%. On the earnings call, the CFO said the decline was driven primarily by lower legal-related costs. So there's lots to be happy about in this report. However, just a few things to keep an eye on. First, costs and expenses increased by 9% year over year. Also, headcount increased 11% year over year. Meta stated that for the full year 2025, they will continue to face legal and regulatory headwinds in the EU and US. They stated that the European Commission decided that Meta's subscription for no ads model did not meet the requirements of the Digital Markets Act. As a result, Meta expects a significant impact to its European revenue as early as Q3 of this year. Cost of revenue increased 14%, but on the earnings call, the CFO said that this was driven primarily by higher infrastructure costs and payments to partners, and was partially offset by a benefit from the previously announced extension of server useful lives. Reality Labs had revenue decline of 6.8% year over year and an increase in losses of 9.5% year over year. Also, regarding full year 2025 outlook, Meta expects capital expenditures in the range of $64 to $72 billion, which is an increase from what was previously reported of $60 to $65 billion. This increase reflects additional data center investments and costs related to AI efforts as well as infrastructure hardware. Also, research and development costs increased 22% and marketing costs increased 8%. Before we look at what Zuckerberg said during the conference call, don't forget to subscribe to my channel for free daily episodes of the Finance Update Daily. Each episode is under 2 minutes with the top 5 or so stories, so be sure to check it out, the Finance Update Daily. It's completely free, and I also post longer finance-related episodes like this one as well. Now back to the episode. During the conference call, Zuckerberg began by saying that the business is performing very well, and he thinks that Meta is well positioned to navigate the macroeconomic uncertainty. He goes on to state that AI is transforming everything and provides 5 major opportunities that he thinks Meta can focus on: improved advertising, more engaging experiences, business messaging, Meta AI, and AI devices. These 5 opportunities are the reason Meta is investing to build out general intelligence and AI and models and infrastructure. Even with these investments, Zuckerberg said that Meta doesn't need to succeed in all of these areas to achieve good ROI. For the first opportunity, improved advertising, Zuckerberg said that AI has already made Meta better at targeting and finding audiences. In Q1, he said that Meta increased conversion rates by 5% and are seeing 30% more advertisers use AI creative tools. For the second opportunity, more engaging experiences, this will be with better recommendations and new content. He said that in the last 6 months, Meta has seen improvements in recommendation systems lead to 7% increase in time spent on Facebook, 6% on Instagram, and 35% on Threads. For the third opportunity, business messaging, he said that the future of developed countries will be similar to countries like Thailand and Vietnam, as AI should lower the cost of labor, making payments through messaging apps like WhatsApp profitable. For the fourth opportunity, Meta AI, he said that Meta has just released its first Meta AI standalone app. And regarding the fifth opportunity, AI devices, which will be the next generation of computing platforms, he said that last year Meta tripled its sales of Ray-Ban Meta AI glasses and is launching later this year a partnership with Luxottica, and Meta released last month its first Llama 4 model. He ended by saying that Meta is accelerating its efforts to bring its AI capacity online this year, and some long-term projects in an effort to provide future flexibility in adding capacity. Overall, an incredible report. Despite global economic uncertainties, Meta has showcased some truly impressive growth, especially considering the size of the company. I think these bullish earnings highlight Meta's robust offerings and its ability to outperform market expectations. Despite concerns over new U.S. tariffs and changes to import exemptions, Meta's advertising sector remains strong. Regarding Meta's 5 opportunities in AI for the future, it is clear Zuckerberg is positioning Meta to be a leader in AI while also leveraging its existing offerings. And investors are totally on board, with the stock climbing almost 9% in 2 trading days. That wraps up Meta's Q1 earnings. I hope you enjoyed today's episode. Watch our next video for similar content.